One is, as we go into like emerging markets that are not familiar with angel and venture space, there's a lot of aversion to this space because it is a risky asset class. If we're looking at private markets, private funds, private equity, angel investing, it's extremely risky, right? But yet it produces the highest reward. And so what we need to do is, and what we do is go into those emerging economies and start to educate them on some of the upside that's available when you get into this asset class. But doing it with an approach, like Orly was saying, taking into account what the economy is, what the market dynamics are, what some of the geographical and geopolitical issues might be. And we have to consider some of those things that may be happening both regionally and across the globe that might be impacting where they want to, when and how they want to get into this asset class. So the way that we approach it is we first talk about, one, what does that ecosystem of high net worth individuals look like? And again, not everybody has a accredited investor component in their economy. So we have to understand, what does high net worth mean to you, and where have you been allocating capital up to date? And what we normally find is that we find that they go into the least, maybe one of the least risk averse areas. Generally it's real estate, is where they're generally putting money. So when we start to talk about, this high risk asset class, we start to understand, we start to educate them on the need to diversify that portfolio, but not over-index on the idea that you have to go all in order to make it happen. And so we start very, very slowly, And by that I mean over the course of 1 to 2 years, we start to really slowly bake into them what that educational model looks like, and then start to tease what I call teaser deals, right? Like test deals. Is this what you would want to invest in? Is this the thesis that you want to develop? And then over time, start to make what I call make the leap, right, in writing that first check. And so when it comes down to diversifying, especially into this asset class, I'll reiterate that it really comes down to the education piece, then the testing piece, and then the jump in the deep end piece, which means when that check leaves your bank account, you should know that you're like, okay, that money has left, and you are officially part of the high risk, high reward club.